It's indeed an absolute privilege and a delight to have with us Madhabi Puri Buch, the first ever chairperson of the Securities and Exchange Board of India. A big round of applause for that. Now, in my career, which is now about 3 decades, I've been covering SEBI since I was a reporter, Madhavi. And of course, I've known you as a banker. But in my years at SEBI, one has been used to seeing, typically bureaucrats heading SEBI. Perhaps the only other private sector person was Mr. G.N. Bajpai, who came from the Life Insurance Corporation. And thereafter, again, the tradition of bureaucrats followed. You have been an absolutely delightful exception now. And you are also, as I just said, you're the first woman chairperson. But other than that, you have made a number of changes already at SEBI, and the imprint is already visible. I'll come to all of that. But the more important part, when I wanted to start off with, is how do you see, it's been about 2 years now at SEBI, close to 2 years. I would like you to tell me how you see your stint of the last 2 years at India's market regulator.
Thank you. It's a pleasure to be here and share some of my thoughts. I think the most important thing in respect of my position as chair of SEBI is that I had the benefit of being a part of SEBI at the one level lower, so as the whole-time member. I think the learnings, and as somebody called it, my house training, happened during that 4.5 years. And it was also said to me at that time, as my appointment as whole-time member, that listen, we want you to get house trained, but not so house trained that the purpose of bringing a private sector person in gets defeated. So that balance between having and bringing and creating a culture that was the best of both worlds, of bringing the public accountability as well as the spirit of the private sector and the entrepreneurial spirit, I think that was the mandate given to me. And it was a big privilege to get that. And I think that's the balance that I have tried my hardest to sort of maintain. In a sense, it's not hard, because when you've been in the markets for 2 decades and you understand and know sort of that entire domain like the back of your hand, and then you've been a part of the regulator and the system and the ecosystem for well on to almost 5 years, it's not that hard.
But that's always a point where, those who are into market misdemeanors would be worried about, because here's somebody who knows the tricks of what they are able to do and can catch them also through technology. Tell us a little bit about because, when we talk to people in the market, it's very clear that you have brought in much more technology focus, and also at a very correct and the right time, because the market is itself getting very technology focused. So tell us a little about how you're using technology to catch these guys.
So I think the repercussion or the impact of my understanding the market is twofold. One is, as you said, I know where all the skeletons are hidden, right? And not only knowing it, but when I engage with the market, sometimes I'll have a conversation with somebody and they'll, say to me that this is not how it works. And I'll look them in the eye and say, I mean, really, I've done that with my own 2 hands and I've been there. So let's just not go there in terms of being in denial of what actually happens in the market. But at the same time, the understanding and appreciation of what are the pain points of the industry, where does the shoe pinch, where is it that there is a question and a frustration. So for instance, when, I frequently talk about, when capital raise has to happen, at that time, if there is a delay at the regulatory end, you can actually miss the timing that you need in the market, and that timing may never come back. So that deep sense of frustration that you have with the regulator is also something that I've experienced myself. And so the focus that we have brought within SEBI to say that every action or inaction or delay or speediness of what the regulator does has very serious impact on Somebody. And that understanding and realization is also, I would say, the other side of having come from the market. But yes, you're right. Technology is what I'm passionate about. I would say data and technology is what I'm passionate about. And I think the reason for that is that I learned many years ago that there is this beautiful, perfect thing called technology, which allows you to reduce cost, manage risk, and delight your customer. Traditionally, these were trade-offs you had to do. You either got to delight the customer or manage costs. You either managed to delight the customer or manage risk. Nowhere did we have this ability to actually optimize on all of this and actually get that perfect balance of these three. So, to me, technology is really magical. So, which is why I'm really passionate about it, and both in terms of deployment within SEBI and deployment in the market ecosystem is something I'm very passionate about. Equally, I'm passionate about data because I think that responsibility that you have as a market regulator, where you impact the lives of so many people, is that you cannot have a discussion about your opinion or my opinion. There has to be a logic, there has to be data, there has to be a hypothesis, it has to be tested, you have to do back testing of the impact of what you do. And without that, there is no discipline and there is no accountability. So if you want to increase the discipline and the accountability in a regulator, to me, being data-driven and therefore transparent about it, and being able to say to the world that, look, we have a point of view basis the data we have. Now, if the data changes, we will change our view. That is the discipline that we need to have, and that is what, again, I feel very passionate about.
So data, in fact, makes it more flexible rather than more rigid as a regulator. Because if, like you said, if the data changes, you can always change your view.
Absolutely.
And that's perfectly legit. Since the topic of the discussion also is leading from the front, Madhabi, I wanted to ask you, when you took over, of course you were you had whole-time directors, members stint and all of that. That was also a full stint you did. But when you took over as the chairperson, in that sense, a big bad world of markets. I don't mean bad in a bad way, but the big bad world of the topsy-turvy of the markets. And you were the first woman chairperson. What are the kind of challenges you faced? And since we are talking about leading from the front, as a woman leader, if there is anything you faced, or was it just, any leader would have faced these challenges?
I'm so sorry. The sound is coming from there. I'm
Excuse me.
very distracted.
Excuse me.
I'm so sorry.
Hello? Please stop talking. Sorry about this one.
No problem. Thank you. Thank you. So, here's the thing. I have never felt, and as Kalpana said, in ICICI, gender was not a thing, right? You were a professional. You had a role to play. You had deliverables to deliver on. You did your job. I didn't find it very different in SEBI. So, to me, gender was never a thing. I had a great boss. He was very empowering. Did I see any difference in the way he treated me or treated my 3 other colleagues? Absolutely none. The way that today my colleagues interact with me, do I sense anything which is gender related? No. So I don't know if I'm just exceptionally lucky on this front, but it's never been a thing. So I don't even know how to answer that question.
And even when you interact with market participants, in fact, they might be more, careful of how they deal with you because they know your background, like I said.
So I think the quality of interaction that I have with the market participants, the dominant, I would say, flavor of that conversation has nothing to do with gender. It has to do with the fact that I have been where they are and that I know and appreciate their position, and that I just happen to be in this seat today. So there are a number of people who will, in a formal setting, will call me ma'am or chairperson. but the minute we step out to have a cup of tea, it becomes Madhabi again.
Okay.
There are many people who, even in the formal setting, will address me as Madhabi, and I have no problem with that. So the equation is of a different flavor. So I just don't feel it.
It's very heartening to hear, because here is a actually government body and a regulator, and you're the boss and talking about that. Let me come, however, to the areas which need attention, and we've had these several sessions discussing this earlier in the evening. It's not the same in terms of the boardrooms, and SEBI has been taking steps to empower women at the workplace, getting more and more representation of women. Top 1,000 companies, yes. Are you looking at increasing the number of companies now that, beginning has been made? Because let's face it, Madhabi, we've also had companies just paying lip service and just having that basic mandatory number, and that's it. While Kalpana before this had said that she's not in favor of, mandating something, but there is a need sometimes maybe from the regulator side to do something beyond that. How do you feel about that?
So I think, I've gone on record to say this, so I will repeat it. The gender issue is very important to our country and to me. However, do I think that a dozen or 2 dozen privileged women like myself being on a dozen boards each is going to cut it for our country? Absolutely not. And so that thinking has manifested in one of the key metrics that SEBI has articulated as core ESG or core BRSR as we call it. So on the gender issue, we received representation that, include this parameter, that parameter, everything, and, lots and lots of, and we said, look, finally what is important? So we've identified only 2 metrics. One is, what is your percentage of your payroll cost that goes to women? It's simple. Don't do this tokenism of putting 2 more women on the board and say we are brilliant. Let's see the disclosure on saying what percentage of your manpower cost goes to women. It will take care of everything. It will take care of whether you have equal number of women in junior, senior, middle positions. Do you pay them equally? Do you have them in, key positions? Do you encourage women to come back to work after their child rearing period is over? It takes care of everything. So that's the bottom line for us. And the second metric is the posh complaints, because obviously that's still a thing, and we see that quite frequently. So for us, that's more important. So if there is a company that has set up, and there is such a company that has set up a factory in a level 4 town and has built a fabulous hostel there for its women employees and has invited the parents of all those employees to say, we're keeping your daughters safe here, and this is a safe environment in which they can work, and that factory has 80% women, I'm saying that's far more important than having another person like me on their board.
Very true.
So we would like to see that gender manifest down the line. We would like to see more and more KMPs, key management personnel, and then when you have all of that, it will bubble up automatically to the board. But simply, parachuting in someone at the top and doing nothing at the bottom, I don't think it's going to cut it for our country.
So BRSR core is one big area where you think that can be achieved. Let me come to the broader market also, Madhabi. At SEBI, the Indian market is now celebrated across the world as very stable, and create a lot of capital raising is happening. IPOs are booming. How do you see the standards of governance? And you've been in the business for a long time, even outside SEBI. What do you see as the improvements or the areas of concern?
So I think that governance goes to trust. And I think that the fundamental approach that SEBI takes to fostering that trust is disclosure. So our view is that SEBI should really not be interfering in what a company does or does not do. It only asks for 2 things on behalf of the investor. right? Because the investors are diffused, they do not have bargaining power, the regulators representing the investors, and we ask for only two things. The first is disclosure, which is to say that in the following things, these things are important for an investor to make an informed decision, and you must disclose this. After that, the investor will vote with his feet, vote with his wallet. Either he will buy you and your price will go up, or he will sell you and your price will go down. And the second thing in terms of governance is the stipulation in terms of what kind of transactions require what kind of approvals. Now, in our view, largely speaking, for most decisions that a company takes or a board takes, there is a very high level of alignment between the promoter and the dominant shareholders and the minority shareholders. So there's no problem there at all because their interests are aligned, and what is good for the goose is good for the gander. The only place where there can be potentially a divergence in terms of the interest is where there are related party transactions. Because the promoter may benefit from a particular kind of transaction because it is with a related party, and it may not be in the interest of the minority shareholders for that transaction to go through. So long as related party transactions are honestly and in the spirit of the law disclosed, in our view, that is the level of governance that we think is required. After that, it's really up to the market and to the investors to decide how they want to vote, as I said, with their wallet.
Madhabi, we are at the end of time. Just wanted one last question to be asked, which is, you've now completed 2 years. It's been quite a stamp which you've already put on this regulator, and with a lot of these initiatives, including perhaps an immediate instant settlement coming up. That's again technology at work. Do you think, what are the key 2 or 3 unfinished tasks you think which you need to now focus on going forward?
So I break that up into internal to SEBI and external in the marketplace. So internal to SEBI, I think a lot of the things that SEBI did, and very rapidly, our restructuring was done in 4 months, which normally, with an external consultant, that would take a couple of years. What I would really like to do is try and institutionalize many of the things that we have done. And after I demit office, my sense is the new person will come, will leave their own stamp. If even 60-65% of what has been created over the last few years stays and gets institutionalized and cemented further, I would be delighted. So my effort going forward in the next year or so will really be to institutionalize the changes that we've brought about. In the external marketplace, I think the most important piece that I would like to see happening is greater financial inclusion. And a simple example of that is a conversation that I had with some of our mutual funds, for instance, because that's a great product for financial inclusion. And right now, I asked them, I said, the 500 rupees per month SIP, is it viable for you? And they said yes. And I said, well, what will it take to make it 100 rupees? And he said, almost all of them said, not possible. It's just not possible. I said, okay, I'll settle for 250 rupees. So now we are working with them to see where is that cost, what can SEBI do to facilitate making it possible to bring that viability down to 250 rupees a month, because then it is the equivalent of what Hindustan Lever did with shampoo sachets. You just explode the market and you just grow the market, and the kind of financial inclusion it brings, and equally importantly, the strength it gives to our markets. So I'll just take a minute to describe what has happened in the recent, I would say, 1 year or so. As many of you know that, globally, money became expensive. Fed was tightening, liquidity became tight. And so foreign money, investment money, left our shores. Unlike other emerging markets, our markets were still resilient. Why was that? That was because retail money came in to fill that vacuum, both direct investments by retail investors as well as through our mutual funds. Now what happened, because the markets remained resilient, is that our share in the global indices went up. The people who left India started underperforming their benchmark index because we were roaring thanks to domestic demand, and they had left, so they were missing out on the Indian returns. And very soon they actually came back because they could not afford to miss out on the Indian returns. So in effect, the benefit of our domestic flows and the retail flows had a double impact. The impact of their coming in and the impact of the foreign money returning because they couldn't afford to miss the Indian story. So I think that's the strength of India. And if I can, in the next year or so that I have, if I can somehow make that viable and to make that 500 rupees into 250, I think that would lay the foundation for the next many years for future growth and further resilience of the market.
More power to you, Madhabi Puri Buch, a trailblazer, ladies and gentlemen, the SEBI Chairperson Madhabi. A big round of applause. Thank you.